The last time we asked ChatGPT to pick stocks to beat the market, it picked 2 stocks that did the job. Check this out. Sterling Infrastructure, ticker symbol STRL, was up 21%, and in that same time, the market was up 5.3%. Netflix was the second stock it picked, and that was up 5.6%. The market was up 5.3%. But it also picked a laggard. Duke Energy was down 4.6%. And then the same time, the market was up 5.3%. So 2 out of 3 is pretty good. So today we're doing it again with smarter prompts, clearer filters, and a new outlook on the market. I'll break down each pick and I'll show you every single prompt that I use to generate each stock. And by the end of this video, you'll know how to use ChatGPT to pick stocks better than most investors. All right, let's dive in. So a novice investor would ask a question like this to ChatGPT. Give me a list of 20 stocks worth buying now. And of course, ChatGPT will just go through and list all the familiar names in the market. Apple, Microsoft, Google, Amazon, Nvidia, all stocks that are household names. Not saying that they couldn't be good buys, but we're looking for opportunities that not every analyst loves or every YouTube channel speaks of. We need to craft our prompts a little better to give us a better shot at finding opportunities that are likely to outperform. So I might ask ChatGPT a question like this. Given the current macroeconomic outlook and indicators such as interest rates, inflation trends, and GDP growth, give me a list of 10 stocks that are likely to outperform the market for the next 12 months. All right, so it gives me a more robust list of stocks now. So things like Costco on the list, IDA, which is a utility services company, Palantir, which should be a familiar name to most of us, SEZL, a company I haven't heard about, that's kind of interesting, Intuit, Citigroup, Goldman Sachs, and BYDDF, or BYD, a leading electric vehicle manufacturer. So we have a lot of names to pick from, a total of 20 so far. But one area that we haven't really looked at is leveraging your power, the power of the retail investor. And we typically find that in places like Reddit, Twitter, and StockTwits. So the next prompt that we focused on is to ask ChatGPT to go find us 10 stocks with recent bullish sentiment among retail investors like you or I. So it picked some interesting names. Names like Reddit. Tesla is always one that retail investors love because it doesn't really trade on fundamentals. Palantir, of course, which has been on a tear lately. And then some more interesting ones like United Health Group, which has been down almost 50% in the last few weeks, but over multiple years has been a significant compounder. And then another one here, QBTS, D-Wave Quantum. It's a speculative opportunity, but it's one that a lot of retail investors are keen in on as quantum computing becomes the next big trend after AI. All right, y'all, I'll tell you this. The process of narrowing down those 30 stocks into just 3 to buy now is no easy task. I used several prompts to screen for revenue growth rates, earnings growth rates, macroeconomic factors that are favorable over the next year, management quality, analyst sentiment, and more. If you want to learn more how I use ChatGPT to analyze stocks, look at this video in the description where I walk you through the process step by step. But here are the top 3 stocks that ChatGPT suggests that we buy now. All right, so the first stock is one that I had never heard of before. So what this tells you is that ChatGPT is able to unearth opportunities that would not have come to your radar without you actually working through these prompts. So it's a very valuable resource for that specific task of unearthing opportunities that we would not have considered or come into our view. The name of that first pick is SEZL, ticker symbol SEZL. So it's a fintech company. It's engaged in the buy now, pay later. So we've probably heard of companies like Affirm, and PayPal actually does some buy now, pay later as well. Founded less than 10 years ago, but check this out. Revenue of $329 million, only 9 years after being founded. That's incredible. And still continues to grow at a rapid rate of over 100% on a year-over-year basis. And then a third of that revenue is its net income, and that's grown by 286%. That is incredible. Earnings per share has grown by 221%, P ratio of 34 times, free cash flow of $61 million, and almost $100 million of cash on the balance sheet. This is an absolutely incredible name, and it just might be one that I might be adding to my portfolio. It's got 4 revenue segments: merchant fees, consumer fees, interest income, and subscription services. What are the macroeconomic factors driving the stock? So there's been a rapid adoption by consumers of flexible payment options. And so that has driven companies like SEZL, Affirm, and others to gain a lot of market share. Recently, revenue is up 123% year over year in Q1, but not everything is great about the stock. It's got both strengths and weaknesses. Its strengths are that it continues to grow its revenue really fast. It's got strong partnerships with retailers, and its cash flow is great with almost $100 million on the balance sheet. But it's got risks. The services that this company provides could be looked at as predatory because it charges really high interest rates to consumers. So that's a concern. It's got a lot of competition from well-established players in the market, so that's something to consider. But all in all, this is a very interesting opportunity that's worth further investigation. What do you think? Why don't you put a comment below? Is this a stock that you'd be interested in investing investing in. All right, let's look at the second stock that ChatGPT picked for us, and it's none other than BYD, otherwise known as Tesla's most formidable competitor. It specializes in EVs, electric vehicles, batteries, and renewable energy solutions. It was founded in 1995, so it's a 30-year-old company, even though we're just starting to hear about it now in the United States. It's a vertically integrated company, meaning that it makes all its batteries in-house, all its semiconductors in-house, and then it also assembles its vehicles. Check out its market cap, 165 billion, which is only a fraction of what Tesla's market cap is today. It's grown its revenue by 29% year over year. Tesla has struggled with its revenue recently, mainly because of the competition from BYD. Its earnings per share is up 33%, and it's got a low debt to equity ratio as well, with growing cash on its balance sheet. Its revenue segments are autos, batteries, which it sells to some of its competitors, electronics, and also helps develop monorail systems in China. So the drivers for this stock from a macroeconomic perspective is the global shift towards more sustainable energy sources. And that's driving the increasing consumer demand for EVs all around the world. One of the other advantages that this stock has over Tesla is it has very affordable cars in comparison to Teslas, which are accessible in parts of the world with lower per capita GDP and lower per capita income. So it's got some strengths and some opportunities. It's got a diversified product portfolio across multiple industries, which is great. So not just making EVs, but with batteries, monorail system development, it's diversified. And it's also a vertically integrated company, which means that it does not have to rely on external suppliers as much as its competitors do. But there are risks associated with the stock as well. It's exposed to global economic fluctuations. Cars in many cases are a consumer discretionary item. And as inflation impacts different parts of the globe, the likelihood that its revenue continues to increase at the same rate is at risk. It also faces a lot of geopolitical tensions. For instance, BYD cars cannot be sold in the United States, mainly to protect the United States auto industry. And China is looked at by many countries as a foe, not a friend. And that impacts the ability of this company to sell into those nations. So what do you think about BYD stock as an investment? Why don't you comment below? Is this one that you'll be investing in? It's definitely an interesting opportunity. All right, so let's look at the third stock on our list. And this is one that's capitalizing on the recent trend of weight loss drugs like Ozempic and others. It's a consumer telehealth company called Hims & Hers, ticker symbol HIMS, offering a range of wellness and medical services. It's an 8-year-old company and also offers treatment for hair loss, mental health, sexual health, and weight management. The weight management piece has driven a lot of significant growth lately within this business. Its revenue growth rate is 111% on a year-over-year basis. Net income has grown by over 300%. It's got significant free cash flow and a very low debt to equity ratio. I love companies that don't have a lot of debt on the balance sheet because that means that they are capital efficient, which means that they're more likely to be able to use their cash flow to grow through efficient marketing spend and customer acquisition efforts. Hims & Hers revenue segments are broken into 3 parts: subscription services. So a significant portion of its clients are just signed up to subscription services and are just charged on a monthly and a month out basis. And you can think about it for hair loss, mental health services, weight loss services. The likelihood that you stay on those products is very high, whether in good economic times or bad economic times. So what's driving the company from a macroeconomic perspective? Its expansion into the weight management treatment segment has been a huge boon for its revenue and profitability. It has partnerships with brands like Wegovy, which is a competitor to Ozempic, which is a key drug in obesity treatments. Recently, it's grown its revenue in Q1 by over 100%. Subscriber numbers continue to grow 38%. This is in Q1 of 2025. So that's significant growth. Now, there's some concerns associated with the stock, even though it has significant strengths, right? So regulatory changes have impacted how available the weight loss drugs are, which could impact its revenue stream. So it's not that the demand doesn't exist, is that the changes in the law are reducing the availability of weight loss drugs to all those that might need it or want them. Also, the stock has a relatively high PE ratio of 78 right now. So it's one that we might be cautious about going in, but stocks that are growing at this rate typically have a high PE ratio. So that's not a reason to disqualify. Instead, it's a reason to just take a closer look. All right, so what do you think about Hims? Is this one that you'd be looking at for your own portfolio? It's certainly an interesting stock. More importantly, we were able to surface names that we would otherwise not have been able to surface because ChatGPT was able to kind of bring them to the fore for us much faster than we would otherwise have without this tool to help us. So what do you think about the process of finding new opportunities with ChatGPT of stocks to buy now? As the tool gets better, it will get easier and easier, and we'll be able to find even better opportunities faster. Right here is a video that shows you some top recessionary stocks that you should look at for your portfolio. And right here is a video that shows you how to analyze stocks using ChatGPT to make it much easier for you. If you enjoyed this video, please like and subscribe. I look forward to seeing you in the next one.